Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is August 30th, 2023. This is a Forex Quick Look. I'll take a look at the Aussie versus US dollar. Looking at this currency pair, the high price that we saw on yesterday's trade moved up to test the high price from last week's trading. That level came in at 0.6487. And what did we do? In the Asian session, we started to move back to the downside. That move to the downside was helped by CPI data that came out of Australia that was a little bit weaker than expectations, and it sent the pair down to this swing area through here, where we had a number of different swing lows and then swing highs, trade above and below it here, and then swing highs through here, and again here. And then we moved above it here, and then you use the level as resistance through here until breaking to the upside and trading yesterday. And as I said today, the price did move a little bit below that swing area through here, but then bounced back higher. And what was key for this pair is that this last move to the downside, remember the CPI came in weaker, came down to that old swing area right through here and found support buyers. We started to inch higher. And in the New York session, we saw seeing dollar selling. We had ADP come in weaker than expected. We also saw GDP come in weaker, and that sent the price back to the upside above the high prices from last week and the high price from yesterday. So this area right through here at the 0.6487 is going to be now risk level for the Aussie versus US dollar. If the price can remain above that level, with this progression to the upside can be continued. That progression has now taken the price above this low right through here, also above this low right through here, which I had earmarked as levels that we need to get to and through. And you can see the last break above here has been fairly limited, and we did the same thing over here where we broke above that old low right here, and the 100-hour moving average. It couldn't sustain and move to the downside. So this 65 113 is sort of a tricky level here that we need to get back above that level to increase the bullish bias. Ultimately, the 38.2% retracement that comes in at 0.65378. That's of the move down from the August, actually the end of July high to the low right here. That level needs to be broken. This is a trend move to the downside, and if price is going to show some corrective potential here, getting above the 38.2% retracement is a minimum that you need to get to and through if the buyers are going to show that they really mean business. If they can't get above that 0.65378 level, then they aren't showing that they can win. And this is just a minor correction in what is a more trend move to the downside. So be aware of that. So first thing, first 65.13, then get above 65.37 to increase the bullish bias. On the downside today, probably wouldn't want to see the price move below the 0.6487 level. That would give this the high break of the high price from last week, the break of the high price this week, a failed status. And I would expect that the market would then come back down toward the swing area, maybe even work its way back toward the converged 100 and 200-hour moving average on the disappointment. So there you have it, a technical look at the Aussie versus US dollar. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.